Hello, and welcome back to the channel. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. In today's lesson, we're exploring an expert advisor called Trend Intensity Index Breakout. It's built around a lesser-known indicator, the Trend Intensity Index, developed by M.H.P., and it follows a trend-following breakout style. By the end of this video, you'll understand how this indicator measures the strength of a trend, how the expert advisor decides when to open a position, and how it manages every trade with a clear stop and target. Everything here is for educational purposes only. Let's get started. Let's start with the big picture. Trend Intensity Index Breakout is an automated strategy that tries to join a move only when that move shows real commitment behind it. Most trend filters ask a simple question: which way is the average pointing? The Trend Intensity Index asks a sharper one. It looks at recent price action and measures how one-sided that action has been around its own mean. Here's the intuition. Over a window of recent bars, the strategy compares each closing price to a moving average calculated as of that bar. Closes that finished above the average are gathered into one pool. Closes that finished below are gathered into another. The index is then the share of the total that sits on the upper side, expressed on a scale from 0 to 100. A reading near 50 means price mass is split evenly around the mean, which is chopped with no real direction. A reading pushing toward 100 means almost all recent action sat above the mean, an intense, one-directional up move. A reading collapsing toward 0 means the opposite. So this indicator is a pure gauge of how committed a trend is, independent of raw slope. The expert advisor uses that gauge to time breakouts. It waits for the index to cross out of the middle chop zone and into an intensity band, and it confirms that move with price sitting on the correct side of its moving average. Every trade is protected. A stop loss and a take profit are both sized from the average true range, so risk scales with current volatility rather than a fixed pip distance. There's also an early exit that steps in when the trend loses its conviction. This kind of approach tends to appeal to traders who prefer a systematic, rules-based method and who are comfortable letting an indicator define the setup. It's designed to run on primary time frame bars, which makes it a natural fit for the 1-hour or 4-hour chart on liquid instruments such as major currency pairs or gold. As always, this is an educational overview, not a recommendation. Now let's walk through the mechanics step by step. On each newly closed bar, the expert advisor rebuilds the Trend Intensity Index. By default, it looks back over a window of 30 bars, and for each of those bars it compares the close to a 21-period simple moving average calculated as of that bar. Deviations above the average are summed into a positive pool. Deviations below are summed into a negative pool. The index is 100 times the positive pool divided by the total of both pools. That gives a smooth number between 0 and 100 that describes how lopsided the recent action has been. The upper band defaults to 65. The lower band is simply its mirror, 100 minus 65, which gives 35. That symmetry keeps the long and short sides balanced. The midline sits at 50. For a long setup, the strategy detects two things happening together. First, the index must make a fresh cross up through the upper band, meaning on the previous bar it was at or below 65, and now it's above it. Second, the closing price must be above its moving average, confirming that price itself agrees with the reading. When both are true, the expert advisor signals a buy. The short setup is the mirror image. The index makes a fresh cross down through the lower band of 35, and the close is below its moving average. When both line up, the strategy signals a sell. Risk is handled on two layers. The first layer is a hard stop and target, both derived from the average true range. The stop is placed at 2 times the ATR away from entry, and the target at 3 times the ATR, giving a reward-to-risk shape of 1.5 to 1. Because these distances breathe with volatility, a calmer market produces a tighter stop and a busier market a wider one. The second layer is a trend neutralization exit. If the index crosses back through the 50 midline against an open position, the conviction that justified the trade is considered gone, and the position is closed early rather than waiting for the stop. The expert advisor also holds just one position per magic number and applies a spread filter, so it only takes trades when the spread is reasonable. Everything is computed from primary timeframe bars alone. Let's read through the code as it would look in MetaEditor. At the top are the input parameters you can adjust in the strategy tester. MA-period is the moving average each close is measured against, set to 21. TiiPeriod is the window the intensity is summed over, at 30. UpperLevel is the upper band at 65, and the lower band is derived from it. AtrPeriod, AtrMultSl, and AtrMultTp control the volatility-based stop and target. There's also a spread filter, a fixed lot size, and a magic number. Now to the heart of it. The two Boolean lines define the setups. Look at bull ignition. It's true only when the previous index reading was at or below the upper level. The current reading is now above it, and the close is above the moving average. That's a fresh upward cross confirmed by price. Bear ignition is the exact mirror, using the lower level and requiring the close below the moving average. In the long block, when bull ignition is true, the entry is taken at the ask. The stop loss is placed 2 ATRs below entry and the take profit 3 ATRs above, then the buy order is sent. In the short block, when bear ignition is true, the entry is taken at the bid, the stop loss sits 2 ATRs above entry, the take profit 3 ATRs below, and the sell order goes out. Notice how both sides are symmetric, with the stop and target simply flipped. That's the entire decision, expressed in just a handful of lines. Let's bring this to life on the chart. Across the bottom, you can see the Trend Intensity Index in its own panel, moving between 0 and 100. The green dashed line marks the upper band at 65, the red dashed line marks the lower band at 35, and the gray line in the center is the 50 midline. On the price chart itself, the blue line is the 21-period moving average, the mean that each close is measured against. Look at the opening bars on the left. Price is drifting sideways and slightly lower, hugging the moving average, and the index is sitting in the low to mid-40s. That's the chop zone, below 50, where recent action is fairly balanced around the mean. There's no commitment here, so the strategy simply waits and does nothing. Now watch the next couple of candles. Price turns and pushes up, closing back above the moving average, and as it does, the index climbs quickly from the 50s into the 60s, driving toward the upper band. This is conviction building. On the fifth candle, the index crosses cleanly up through the upper band of 65, having been below it on the prior bar, and the candle closes above the moving average at the same time. Both conditions are now satisfied, and the buy entry marker appears. Notice the stop loss would sit 2 ATRs below, and the take profit 3 ATRs above, giving that reward to risk shape of 1.5 to 1. From there, the up move carries on. The following candles print higher highs. The index pushes deep into the intense uptrend zone, into the 80s, and price rides above the moving average the whole way. On the ninth candle in the sequence, price reaches the take profit target and the trade is closed for a gain. Note that if the index had instead crossed back down through the 50 midline while we were long, the neutralization exit would have closed the trade early. Here, the target came first. Now the market rolls over. Price stalls, then turns lower, and the next few candles close back below the moving average. In the index panel, you can see the gold line falling away, dropping through the midline and heading toward the lower band. On the 12th candle of our sequence, the index crosses down through the lower band of 35, having been above it on the prior bar, and that candle closes below the moving average. This is the mirror image of the long setup, and the sell entry marker appears. This time the stop loss sits 2 ATRs above entry and the take profit 3 ATRs below. Price then follows through to the downside. The final candles print lower lows. The index sinks into the intense downtrend zone, and price reaches the short take profit target, closing the trade. So in this one illustration, you've seen both halves of the strategy. A long that was signaled by a fresh upward cross of the upper band with price above its mean, and a short signaled by a fresh downward cross of the lower band with price below its mean. In each case, the index moved out of the chop zone and into an intensity band. Price confirmed the direction, and a volatility-based stop and target framed the risk. Of course, not every signal plays out this neatly. In live markets, some trades reach the stop, and the neutralization exit will sometimes step in before either level. That's exactly why the fixed stop and the early exit both exist. So there you have it. Today we broke down the Trend Intensity Index Breakout Expert Advisor. We saw how the Trend Intensity Index measures how one-sided recent price action has been around its own moving average, how the strategy enters on a fresh cross of the upper or lower band confirmed by price, and how it protects every position with an ATR-based stop and target plus an early neutralization exit. Remember, this video is educational information only, not financial advice, a recommendation, or a solicitation. Trading carries risk, and losses do occur. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment telling me which strategy you'd like me to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.